In today's video, traders, we're going to be talking about trading the daily time frame and why it's one of my personal favorite ways to trade the markets. Let's get into the video right now. So welcome back, traders, to another one of my videos. Today we're going to be talking all about the daily time frame. Again, what that basically means is that a daily chart essentially means that each one of these bars is one full day of trading. I know it sounds basic, but for those of you guys who are newer to trading, it's important that I make sure that I clarify that. So each one of these bars is a full day's activity of trading. Now, believe it or not, there are some really big differences between trading charts that are the daily bars compared to something like the lower time frame, like a 5-minute, 15-minute, 1-hour chart, right? There are some unique differences that in today's video we are going to talk all about on trading the daily time frame as opposed to trading the lower time frames. Now, the daily time frame is one of my favorite ways to trade the market. And the reason that is because I find it much easier, much cleaner to kind of get a good picture of what the market is doing by using the daily time frame. For me personally, I don't need that kind of rush or that fast moving market that other people may need. Now, again, that doesn't mean that it's right or wrong to like shorter time frames. I'm just saying what my personal preference is, which is I like to swing trade. I like the slower movements in the market so that I can take more time to do my analysis and there's no rush on my trading. And, over time, it just kind of settled with me a lot easier than intraday trading. And I still do intraday trading. I do more active trading. However, my sweet spot or my favorite way to trade is to use the higher time frames and trade along with the daily kind of bars. So what are some things about trading the daily chart? Now, again, I mentioned that each one of these is a full day of trading action. Now, that also kind of implies something kind of interesting. What that tells us is that the market, you can get a very good picture of a little bit bigger of a time frame. So when we look at something like this area here, right? When we look across this entire area, now what we're looking at is not a few hours of movement, but we're looking at maybe 2 to 3 months of data, 2 to 3 months of activity in the real world. Think about our actual lives, right? 2 to 3 months, that's a significant amount of time in terms of kind of what's going on in the world. For example, parliamentary votes or President Trump doing something in the US markets, right? There's real things going on for this amount of time. And so market sentiment does tend to kind of shift a little bit slower over those longer term time frames. And this is really cool because this gives us the opportunity to look for kind of longer term trends. And that's really what I want to get into today with the daily chart, is talking a little bit about understanding the market's trend using those higher time frames. Again, a trend on a daily time frame is going to be a little bit stronger because it has more going into it, right? There's full days and weeks of conversations and economic reasons for a trend rather than just for one particular morning looking at the 15-minute or the 1-hour chart, right? You might get some sort of news release in the day that gives you that intraday trend. Well, this might be an entire month of kind of activity that goes into creating a strong longer term trend. So trends can be stronger on those higher time frames. In fact, if we look at Euro USD, take a look at this, guys. We're looking at a daily chart. Look how long this Euro USD pair has been in a downtrend. Now you may ask, why is it in a downtrend? Why is this so strong? Well, the euro has been weakening over time, and also there is a positive swap to be made for holding this position short. Back up, if you don't know what that is, there's a video right here on the carry trade or swap collecting, basically collecting interest for holding a particular currency against another. And you actually get paid a positive swap to hold the Euro USD short. Now, I'm not the only one who knows this. Clearly, the entire world knows this, and institutions and hedge funds and banks and all of that, they're looking to potentially ride that carry trade and sell this market along the way to kind of enjoy that positive interest swap payment that they're going to collect for holding these two currencies. Now, if you hold it short, you do get paid. If you hold it long, you actually have to pay. Right? So now we see kind of a natural drift on this currency to the downside. Just another thing contributing to these strong long-term daily chart trends that we do see. And we can even see that recently. You can see that we have had some very strong kind of sell pressure here on the Euro USD. Now, if I draw just some simple trend lines here, what you can see is that we've actually been in a channel range for quite some time, going back all the way. What is that? That is right around the end of 2018. At the time of making this, it is September of 2019. And what you can see is that this market has chopped back and forth, respecting this channel along the way. Now, this is super interesting to us because this kind of tells us that the overall market sentiment here for at least for the time being, is down, right? The market sentiment pushing price down all along the way. Again, collecting that positive swap, everything going on in Europe, everything going on with the US dollar strengthening, all of that is going into this long-term economic trend. Now, if you're a fundamental trader and you like to read into kind of what's going on from a fundamental standpoint, the daily chart might even be even more appealing to you because you like to look at those economic factors, again, those long-term trades, long-term investments or kind of trends that go into kind of the currency market. Now, on the Euro USD especially, recently we've seen some interesting stuff. If we draw some trend lines, you can just see the market does tend to kind of have a prettier, if you will, kind of pattern to it. The market seems to move a little bit smoother than on those daily charts those intraday charts where you can have massive spikes really quick on news, and then, it can be all over the place, right? There's a little bit more noise on the lower time frames, as opposed to when we trade the higher time frames, we get a little bit less of that noise. Now, you're still always going to have some amount of noise in the market as emotions can run high, but the overall concept here is that we do see, trends tend to be a little bit prettier, in my opinion, or at least in my experience, on the daily charts. So we can see that there's a clear downtrend here. So we can kind of get that into our context. Now, even if we're trading intraday, it's good to use the higher time frames to understand what's going on. This gives us a market sentiment so that if price comes into maybe this area, maybe on the intraday level, we look for possible shorts, right? We have some sort of short bias in this area. Using the daily time frame, again, can give us a little bit more context to what's going on in the market, right? It also allows us to draw significant levels. For example, this level here, now we can clearly see that that area on a daily chart, remember those higher time frames, more significant. We have a daily resistance here, right? We also have a daily resistance here. Right? These areas are clearly levels of interest for buyers and sellers historically. And the daily time frame is also more significant because think about it this way, right? One bar of a daily chart is not just like 15 minutes of trading. This when a whole day went into creating this bar. So one whole day went into creating this particular move in the market. That means that there was a lot of interaction from market participants, which may mean that it's more significant than something that happened on the 15-minute chart really quick, right? A lot of trading volume went into this candle. In fact, I'm gonna write that out. Volume went into this bar if it's a daily chart, right? That means that there's more behind it. There's more interaction, more shares or lot sizes or futures contracts, whatever you're looking at. There's more volume involved, meaning that's a more significant kind of movement. So again, overall, the daily chart is a beautiful way to kind of just get an overall picture of the market, but it doesn't just go on the Euro USD. Again, you can look at futures market, cryptocurrency, whatever you're looking at. The daily concept is something that is universal. So XAU USD is another thing. Take a look at what we see here on the daily chart. What you can see is if you were just looking at maybe like the 30-minute time frame, you might not have understood kind of what's going on. You think the market is in a downtrend. But if we zoom back out to that daily chart, look at what we see happening here on XAU USD. In fact, the story is quite clear when we look at these higher time frames. Now you can see if I draw this trend line here, price is currently headed back to test a major trend line level of support. But even more so, I want to point out a trade that we talked about in the VIP team. By the way, if you're not a VIP member, there's a link down below in the description if you want to check out the services that I do offer. So we're looking at XAU USD again on that daily time frame. Now check this out, guys. What we see here is a beautiful bull flag pattern, right? You can see price was moving. There's our flag pull. In case you don't know what a bull flag kind of movement looks like, essentially it's a pull followed by a flag. See, it makes sense. And then it breaks out, right? And it doesn't work out perfectly every single time, but this is an exact trade that we had talked about for actually a few weeks, right? So this movement is multiple daily candles, meaning it's a couple weeks of time. We had talked about price consolidating and tightening up on this bull flag pattern, and then we get a pullback after it breaks out, and we saw that continuation. In fact, a lot of members caught that beautiful trade there on XAU USD. Now that's something that we only got because we were looking at the daily bar, right? Understanding the daily candlestick is a really, really powerful thing for understanding the macro trends, the bigger time frame trends that are going on behind the scenes. Again, if you were only looking at that 30-minute chart, you might not have gotten the full picture. Now, breakouts are also an important thing to look at on the daily chart, and that's why I've got the GBP USD pulled up. This is the Great British Pound against the US dollar, and if we draw another trend line here, check out what we see happening on this particular chart. This is another thing that we have been talking about in the VIP group. We have been talking about the fact that there is, again, a macro trend to the downside. This is a long term. This is all the way back in May. Again, it's September now. So think of that. Multiple months going into this particular chart that you're looking at. So we see price falling down and down and down, but take a look at this daily interaction here. I'm going to zoom in just one more time. We'll pull up the sketch pad. And what we can see here looking at this chart is, again, we had a very bearish market sentiment, but getting onto the daily chart allowed us to get a little bit more clean of a picture. So we saw rejection along the way, rejection here, but then right here, this is where things changed. See how price broke through that level significantly, right? That's a potential sign that there might be some continuation. In fact, that's exactly what we talked about a few days ago. In fact, 3 days ago, 1, 2, 3. The beauties of a daily chart, right? So we saw that breakthrough. We saw a continuation after the fact and continued into this week. So just getting that daily chart gives us a little bit more of a backstory, right? On GBP USD, we've been bearish for quite some time, but getting a clean picture, you can see it's a very clean break here on GBP USD that you're not going to get so much on the lower time frames. That's kind of the beauty of a daily chart, is it's usually pretty kind of straightforward. It's a cleaner chart in my opinion. I see less noise. Now, if we go down to the 15-minute chart, let's take a look at this, right? Take a look at how price is kind of just, it almost seems a little bit more noisy, right? It's just up and then it's down really quickly, and you can see price is really, really quiet. Look at this. No volatility here, massive volatility here, massive volatility here, low volatility here, low volatility here. Now, what is that? Those are different sessions going on. So if you're a day trader, then you like to probably trade these sessions, or if you are, trading overnight, you want quiet markets. I'm not a big fan of that personally, but there are people who like to trade quiet markets, right? You can do that on the intraday level. But the cool thing about the daily chart is that there are multiple sessions in each one of these bars. So that gives us the opportunity to get a little bit cleaner of a chart overall and to see stuff with a kind of cleaner lens, if you will. Guys, hopefully this was helpful to you on the daily chart. If it was, please make sure you give this video a thumbs up down below and subscribe to the channel if you are not already. We'll catch you next time.